What's up, YouTube? This is Thomas from Thomas Invest and thank you for watching. Today I want to talk about Tesla, ticker symbol TSLA. This is a very popular stock and there's a lot of hype around it. In this video I will try to give my opinion and of course 3 stock price scenarios. If you're new to the channel, make sure to subscribe to get notified when I'm posting a video. I also appreciate an early thumbs up which helps me within the YouTube algorithm. For now, let's dive into it. So, we all know Tesla. No explanation needed. Everybody loves Tesla and you will see them almost in every city. It's a beautiful car in my opinion and it's led by one of the most popular CEOs of this moment, Elon Musk. When it comes to investing, this is where emotion kicks in for a lot of people. Elon Musk is great, the Tesla car is great, so the Tesla stock must be great too. And if you take a look at the price of the ticker symbol, it's pretty amazing to be honest. But are the fundamentals of the company amazing as well? Let's find out with my fundamental analysis, starting off with the PE ratio. Tesla has a PE ratio of 540. This is huge and of course a red X. We have to keep in mind that Tesla just became profitable, but we will find out more about this. Tesla has a profit margin of 3%, so again this is a red X. But if you take a look at other car companies, you will see also a lower profit margin. This is typical for the car sector. Since 2016, the revenue is up 350%. This is amazing and of course a big check mark. But I have to admit that the last 2 years were a bit slower in terms of growth as we see in this chart. Profit growth is also up since 2016, from a negative profit to a positive profit, so it's a check mark, even when it's barely. The return on assets and the return on investments are both positive right now, but they were negative in the previous years. They are also below 10, so it's a red X. But they do a good job in making their investments positive. Tesla issues more share in the past years. This is no surprise and also a red X. But I have to admit, if they were buying back shares right now while they were heavily overpriced, then maybe you want to talk with the board of directors. So even when it's a red X, I don't blame them for issuing more shares, because they are overvalued. Tesla has a current ratio of 1.66. This surprised me a lot and is also a check mark of course. With the current ratio you want to check if the company is capable of paying the current liabilities with the current assets. You want this number sitting at 2 where 1.5 is the absolute minimum. From a negative free cash flow in 2016 to a positive free cash flow in 2020. This is a big check mark. But please keep in mind that even with this big growth in free cash flow, it's not a lot of free cash flow in terms of dollars. This is where it's getting interesting. First of all, I don't think I need to explain why Tesla is overvalued. We all know it, but that shouldn't keep the stock price at the same level. A lot of investors love the stock and think Tesla would be enormous in the future, if they aren't already. I think the stock price can go up even more just because all the hype etc. But because this channel is all about finding the right value at the right price, I will say Tesla is overvalued big time. In these 3 charts we do see some growth scenarios. My biggest growth scenario is already too big for most of the companies. But I will show you the growth ratio that would be fair for Tesla at this stock price. Normally we use a 15 as a low ratio, 20 as a mid ratio and 25 as a high growth ratio. As I said, not a lot of companies are capable of hitting that ratio of 25. At these prices, Tesla needs to hit 222 as a growth ratio to be at the fair value with this stock price. My conclusion is that I love Tesla cars. It's an awesome company led by an awesome CEO. But I don't love the fundamentals of the stock. It's way overpriced and I will pass this one. I don't think that the stock price will fall down all the way to the fair value in the coming months or even years unless there's a big crash or something. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a video. Thanks for watching and I will see you in my next video.